joining us now to discuss this news with Coinbase and other things involving the crypto market is Pastel Network co-founder Anthony Georgiades. Welcome, Anthony.
Great to have me. Thanks for being here.
Thank you. So, of course, as we've been reporting, Coinbase might have beat expectations, but definitely the transactions are down from where they were last year. What do you think? What's your general take here on transaction revenue and some of the other efforts to diversify that top line? It seems to be moving along, but is that sustainable given that there's only so much you can expect to grow with interest rates?
Certainly. Yes, we've seen over the last year that Coinbase has lost a significant market share against ballooning customer acquisition costs. You've seen fees that have continued to meaningfully compress against smart competition in the market. And obviously this has had a significantly negative impact to overall profitability. The positive quarter relative to expectations, as you mentioned, granted, right, it's not necessarily a great quarter relative to the continued deterioration, but with respect to beating expectations, I think part of it has to do with a large uptick in market share that Coinbase has been able to gain off of the bankruptcy of ETF, for example, and some of the other exchanges that have tanked over the last couple of quarters. I think one of Coinbase's largest intrinsic barriers is actually the regulatory stronghold that it has in the market, being obviously a publicly traded company itself. It has the regulatory scrutiny of large legislators, large regulators, and I think that has given a lot of consumer and retail investors a lot of trust to actually move to that particular exchange. Hence, we've seen up about 50 basis points in terms of its overall market share of trading volume in the last quarter itself.
So
same regulatory. Mm-hmm.
It's trust in Coinbase, but it's the nicest house on the ugliest street versus being the ugliest house on the nicest street. And as we know, if you're a real estate investor, you actually want the ugliest house on the nicest street versus the nicest house on the ugliest street. In other words, it's a market where confidence in the underlying assets, which is the digital assets, the confidence is eroding, or at least it eroded tremendously over the past year with Terra Luna, with 3 Hours Capital, and now and then FTX. Is it sustainable? I mean, is this long term? Just because it has all the confidence that if you're going to trade digital assets, that's the place to do it if you're an American, but do you think that retail investors want to trade digital assets going forward in any significant amount like what we saw a couple of years ago?
Digital assets are certainly here to stay. Now, the level of crypto or retail adoption and speculation in overall digital assets is certainly up in the air and a question at this point in time. And to your earlier point, it's been super sensitive to price swings in crypto market, which have been highly sensitive to broader monetary policy, macro events, and the broader market environment that we've been living through. So, it's, to your point, it's not necessarily anything that's unexpected. You've seen the tight correlation between Coinbase as a stock price itself, the underlying, versus certain digital assets such as Bitcoin or Ethereum. That being said, I do think that given what's happened in this sort of tumultuous market, Coinbase does have an opportunity to beat expectations relative to regaining a significant amount of that market share that it did lose over the last 2 to 3 years.
Yeah, we did see transaction volume falling 12% quarter over quarter. So how do they make up for this loss?
One area where Coinbase has been focused on, and I think if you look at that chart in terms of net revenue, obviously you've seen the net revenue deterioration on the customer side. What's maybe more concerning is actually the revenue deterioration on the institutional side of things, which was meant to be a high growth area for Coinbase itself. Some other areas of growth, coin custody, stable coins, and staking products. I think what potential investors should be mindful of is these 3 hyper growth areas are all coming under significant regulatory scrutiny. You've seen obviously recently that Kraken entered into a settlement with the SEC to close its staking product. the SEC has been hinting recently that it's going to be tougher on the regulation of crypto custody. So if Coinbase is looking to continue to drive hyper growth across those new product lines, it might need to reevaluate where it's domiciled as well, if the US does decide to step into that respect.
Yeah, in terms of also the custodial business and what have you. I mean, obviously, this is you don't think that it will grow as well. I mean, do you think that people will look for non-native custodians of crypto assets going forward? It seems to be something that we're hearing about in terms of like maybe perhaps that's the best route to go. The Fidelities of the world will actually be the best source of custodianship of digital assets rather than digital native ones like Coinbase. Do you think that that's also a headwind that Coinbase faces?
I think they actually kind of go hand in hand in some respect, because if you have some of the more traditional Wall Street institutions, which have hinted recently that they are stepping into the space, especially off the backing of some of the debacles we've seen, that's been actually one of the kind of pivots in the broader market. The FTXs and 3 Arrows Capital of the world that are going down has opened the door for more traditional institutions, TradFi, to step into the realm here. But I don't necessarily think that they will necessarily fully dive in unless that regulatory framework is set. And if that regulatory framework is set, it will provide much more confidence for an ability for Coinbase to continue to drive some of that crypto native market share. I don't necessarily think by any means it's a winner's take all market, particularly in the custody world where diversification of third-party custodial providers is the name of the game.
Yeah, I mean,
right.
I do want to point out that, yeah, when I'm looking here at the custodial fee revenues, it was nearly $50 million in Q4 2021, and this latest is now 11. So it's 1/5 of where it was a year ago. So I mean, do you think that basically they're going the traditional finance people might look at this and be like, what's the point?
It's certainly possible, but if you have large institutions like BlackRock, for example, that have clients demanding this product, they'll figure out a way to service that product, as we've seen the last couple of weeks.
All right. Well, zooming out, we're also taking a look at the latest Fed meeting minutes that will be released later today. And so from a macro perspective, what's your outlook on the Federal Reserve's monetary policies and how it could impact risk assets in the crypto markets?
Mm-hmm. The market itself has been pretty, largely undecided. We saw a little bit of a rally recently that, maybe the Fed might be able to ease up on rates. I think at one point the market was pricing in 300 basis points in terms of interest rates towards the end of the year. I think what we'll probably end up seeing is that the Fed will decide to raise rates, but it's going to be more of not necessarily the quantity of rates at that terminal level of 450 or 500 basis, but the accumulated weight of how long those rates stay intact. That's going to continue to have a large impact on risk assets over the near to medium term.
All right, Anthony, thank you for your analysis. That was Anthony Georgiades, co-founder of Pastel Network.